Hello, my name is Rishi and I am a trader and a mentor at Triumph Trading based in Birmingham in the UK. Now, the purpose of this video and the series of videos to follow is to document the journey of making $4,000 to $20,000. And the reason I've chosen this figure of 4,000 is because when a beginner trader starts an account, it is the minimum requirement that you need to open that account. So obviously starting with that amount, and also with a beginner as well, they don't have a huge amount to start with, because typically most traders are young, or they're coming out of the job, or for whatever the reasons they haven't got a huge amount to invest, and rightly so, they shouldn't start trading. So I'll be starting at that figure and showing the journey of how I reach each checkpoint to increase size, contract size, which initially will be doubling the size, and then as I can add a third contract, will be trebling, and so on. And as I progress, the more contracts I can add will mean the more money I can make, which will make it easier to reach $20,000. But initially, the start from 4,000 to 8,000, because that's when I can add my first contract, will be very painful, very slow, because you can only trade one contract. So therefore, you have to play it safe, but there's not a huge amount you can make with using one contract, so it's a much slower journey. So this is the path that a beginner trader would take. So I'm hoping that from watching this, you guys watching at home can learn, see how it's done, use my methods, and if you do have any questions, you're welcome to message me, contact me. I'm happy to offer any services or any just advice online. Just send me an email, and yeah, we can hopefully make you guys some money. Right, so if I take you to my screens now, I'm going to explain a bit more about my trades. This is the first week that I've started the challenge, so I've started with $4,000. I've made a profit, but let me show you the screens now, and I'll take you through each trade that I've done. I have traded 4 out of the 5 days this week, and every trade has been successful. Let me show you the first one. I'm going to show you my account balance first, so you can see on the screen what I'm starting with. Then at the end of the video, I'm going to show you what I've finished the week on. So have a look at this now. So as you can see here, this is my screen. I took a picture at the start of the challenge on Monday, and I started with an opening balance of $4,042.45. So as you just saw there, that's my opening balance of $4,042. Closing balance was great. For a first week, I finished on $5,507.52. Which left me in a profit of $1,465, which, trading on a single contract for a beginner, playing safe trades, 1 trade a day, is fantastic, and that's more than you can really ask for. So what I'm going to do now is I'm going to take you through my trades day by day, and just give you a quick explanation of what I did, why I did it, but not going into too much depth. But take a look at day 1. So this is the first chart on day 1. It's for crude oil WTI, and I'm showing you right now a 240-minute chart. So as you can see here, these lines represent my entries. So that the dotted line is my entry, the red line is my stop, and the green line represents my profit target. So the reason for the entry here is I always aim to have my entries and stop losses based upon previous support and resistance levels, as well as that they have to coincide with pivot levels as well. So it's exactly what's happened here. This dotted line is my entry. As you can see, if you go along, this is a significant, this level here, significant previous support level. I mean, it's hit that and it's bounced all the way up. It has broken it, but it's still a previous good level. So that's one reason for entry here. As well as that, just above that is the R1 level, the R1 pivot level. So that's another reason why I believe that it shouldn't break through here, and then just above I've got my stop loss. And if you look where this why this is a good level, it's a previous support level here, but that's not a major one, so we don't have to really take that into much account. This level here, it's a huge area, so I'm hoping because of this it shouldn't break. So now I've got, and if it does break above that, I mean there's nothing really substantial past this, so then it's a good reason to have this as my stop loss, because it's most likely going to go straight up to this here, the $66.29 level, and that's too much of a loss. So perfect, this is a perfect level for me, and this also must, well, for a perfect trade I would say technicals must coincide with fundamentals, and on this day they did. They were very bearish fundamentals, so that was the reason why I waited for it to go up, hit my level, and I was waiting for a retrace all the way back down. So what I shall do now is I'm going to break this down onto a smaller chart, a 15-minute chart, and I'll show you how this resulted. You can see it's resulted here in, it's gone all the way up and it has fallen down very close to my my target. But I'll show you what happened in a smaller chart, as well as that what happened after as well. So it's this is the level, this is the pivot level, this green line, as you can see on the previous chart there. That's the level there. So I'll put this enlarged. So it's gone up to my entry here. As you can see as well, this is another big factor with my trading. You have a good significant level. They don't always exactly touch those levels, so you need to create a zone. Typically 5 ticks above or below should be your zone. Even 5 ticks can be too much, but because it can affect your risk to reward ratio. But yeah, this I've got in just before the exact level, and as you can see it's worked out perfect. So it's got me in here, and from there it's just dropped all the way down. It's reached my profit target level, but this, if I kept it exactly at my profit level, my profit target, I would have achieved 42 pips. But because I do zones, I've got out just shy of that. So I actually, instead of claiming 42 pips, I claimed 33 pips. But that's fine. Being a beginner trader, as I'm trying to represent in these videos, you have to be conservative because booking profit is most important. So instead of booking 42 pips at this level, going all the way down to this level, I've claimed it slightly shy, probably around this kind of level here, which is 33 pips, which is great because on WTI per pip it's $10, so I've achieved $330 just there. So fantastic trade. And what's actually happened is it's broken the pivot level, which was my target. It's gone down to here to 65, just shy of the $65 level, which the reason it's gone very close to that, it's a psychological level. So it's hit that, met support, and it's bounced back up. So if I did have 2 contracts, I'd probably book at my first target, and then the second contract I would have booked just around the $65. And if I did have 3 contracts, I would have let the third one run up to here, but obviously I don't have that, and I've got 1 contract for now, so I'm being conservative and I've booked well. So yeah, this trade for day 1 claimed me 33 pips, which is $330. So now let's move on to day 2 and my second trade. Okay, so this is the chart for my trade on day 2. It's the WTI crude oil chart, and it's for 240 minutes. As you can see, again, I've gone for a short trade, again because of the fundamentals were bearish, and I do always look at fundamentals. Here I've identified a downtrend from this candle to this candle, and this wasn't there at the time, but I identified it as a decent entry point, a reason for entry. So my stop loss has been placed at this level because of this previous support level, and I mean the reason for this entry was typically there should be previous support resistance levels here, but there aren't any. And on this day, they'd already surpassed the pivot levels of the initial pivot level, then R1, and then it even passed R2. But it had gone long. I mean, look at these candles. They'd gone long on bearish fundamentals, so it didn't make sense to me. So with this trend line, I thought this would be a strong trend line, and listening to fundamentals, I thought it has to short at some point. So I identified this exact point here to be a great entry. Reason being, the fundamentals were short, and I thought 66.50. The 50 is a round number. Round numbers are usually good psychological levels. It doesn't really coincide with any previous support or resistance levels, so it's not fantastic, but I thought the trend line was strong. The fundamentals was another reason for a short, and this psychological level had to stop it from going up any further. So I identified that as my entry, and this level here as my stop. I mean, it's only 18 ticks up, so I'd lose $180, but the risk to reward would definitely be worth it. So let's look at it now on a smaller chart. I'll take it to a 60-minute chart. As you can see here, it's hit it perfectly. It's hit exactly at that level, and I've got in here at this small arrow, and it's gone down to my target. I've got out early. The reason I've selected this level as my target is, again, psychological. I've done it as $66 and 0.07, sorry, but I've used that as a zone. The real target would be $66, the psychological level, which it did achieve, but I've chosen this to get out short early, just because, again, being conservative. But again, 66 is the psychological level, and it's a good level to aim for your target. So I'll break this down again onto a 15-minute chart. This is what happened. I mean, it hit there and it just kept falling. It did hit that. I haven't taken a picture of it hitting that and falling slightly below, but there was a retracement, or there was a bounce at 66, so I was right. But this arrow here is where I got out. So if I held it to 66 or even 66.07, the exact level that I predicted, I would have achieved 43 pips, which would have been $430. But I did get out early, just being conservative, as I should be, which is great trading for a beginner, limiting your risks. Instead of claiming $430, I claimed 34 pips, which is $340. So that's a fantastic trade again. Pretty textbook for me. So I'm very happy with day 2. So now let's move on to day 3. Okay, so here we are on day 3. Again, trading crude oil, WTI. I've got up here a 480-minute chart, just so I can show you further back the reasons I've chosen my entry levels. So starting with the entry, this black dotted line, I'm going across. I mean, it's more so for these levels here, and the far end going back, the pretty prominent big levels. And then the other reason for the entry, this is also the day's R1 pivot level. So that's another good, strong, another level to make it pretty tough. So just below is my stop, and as you can see here, this is a really prominent candle. It's the high of the day before, so that's the reason for my stop. So this is a long entry, by the way. So if I break this down now onto a smaller chart, I'll take it onto an hourly chart, the 60-minute. So as you can see here, it started, this is the start of the day, so it's just been going long. The reason it's been going long is because typically the week before and a few days before, it's all been bearish news. What's happened on this day is, with the whole trade war going on with Donald Trump and China, some light has been given, has been shed, that a potential agreement could be made. A Chinese delegation is being sent to America to speak to Donald Trump to create an agreement on the whole crisis that's happening. So, I mean, with the issue before, there'd been no talks, no delegation was even thought about to be sent. There was just silence. So this was very heavy and bearish for crude oil. So just because of this news that delegation will be sent, crude oil has reacted positively. So demand will increase for crude oil if a deal would be met. So therefore, it's a bullish day. The fundamentals are bullish. So therefore, I was looking for a bullish entry. So I'd missed the start of the day. I could have entered here. It would have been a good entry here. Perfect, actually. The pivot level starting the day was at $66. So if I was at my desk at that time, which I wasn't, due to other commitments, I would have gone long here, had a very tight stop, probably at this level. It would have been a perfect trade, and it would have gone all the way up to, I would have held it to $67. That would have been 100 pips on one contract. That'd be $1,000. But I missed that, and that happens. I mean, we'll all miss trades, but we can't be wild and just jump in, say, randomly in the middle of the trade. You can't do that. You have to wait for your exact point. So what I did was I identified the next strong level, which was here, and this level here is the day's R1 pivot level, so resistance level. So what I wanted was typically a classic trade, which is a breakthrough, then a retracement back for it to then continue further up in the direction that I want it. So that's exactly what's happened, and there's the previous high from yesterday, acting as my strong stop loss. So let's break this down again onto a smaller chart so you can get a clearer view of what actually happened. Let's see. Here we go. So on the 15-minute chart, pivot level here, it's gone all the way up. It's gone up past my entry now, the R1 level, as I predicted. So it's gone up and it's gone down a little bit. Hasn't exactly touched the R1 level, but because I create zones, I just barely made the entry, and then it continued up. I pulled out. Well, this was my target level again, psychological level 67. It's a good reason to take profit here, but I knew it would continue further. But this was the safer bet, and it did actually continue, and it did slightly break R2, but this was a brilliant exit. What I actually did was I did leave slightly early, only 2 ticks early, but it was near enough here because of my zones. I could have claimed 40 pips if I pulled out exactly here. I claimed 38 pips, so I only missed 2 pips on that day. So 38 pips claimed me $380. So third day in a row successful. It's a brilliant start to the week. So far, no losses. Now let's move on to day 4. Okay, so here we are on day 4, and again trading crude oil WTI. My entry for today, well, for that day, was at the pivot level. There was no major reasons for entering at the pivot level, apart from it was a pivot level. There was no previous support resistance line, so because of that, I kept my I kept my stop loss very tight. And the reason I chose the stop loss was just that's the level there from the previous day. It's not fantastic, but it's a level, and it's fairly tight. And I knew the risk to reward was worth it. So I mean, as you can see, I would be claiming all of that and only risking that amount. So that, coupled with very continued bullish fundamentals, I knew it would continue going up. So I just thought, yeah, it's too much for it to fall back down to here to S1. So it just made sense for it to be here for a continuation long. And with all this consolidation here and the news, it just seemed right for it to do the small retracement back there for it to continue going up. So that's the reason for my entry. That's the reason for my stop. That's the reason for my direction. I had a fundamental reason, so I chose long because of the day's news. And the reason I've chosen this as my profit target is, again, it's the psychological level, so it's the safest bet for me to pull out. And as well as that, I entered here, I exited here, these are the exact candles. And I pulled out here because previously of that day, and even yesterday, it was yesterday's high around the $68. And even continued for the day I made this trade, it couldn't break $68. So it just made sense on single contract that this is the safest place to pull out. So if I show you the chart, this is a few days later, but I'll show you the chart, what actually happened, and what you can actually achieve with, I'm a day trader, these are day trades, day trading strategies that I show you, but if you was a swing trader, I will show you now what you could actually achieve. So this is that same day again. This is the entry level, exited there, and if I held it because of my fundamental view of it being bullish, I could have made a lot more on my money. So let's show you a bit further along down the line what actually happened. So this is my entry. I exited here. I claimed 56 pips, which that's fantastic. 56 pips is $560 on a single contract, so I did well as a beginner on my fourth day of the challenge. But if I had a second contract as a day trader, I would have to have held it past that day though, so therefore I'd be becoming a swing trader. But with the fundamentals, it didn't break down below that. It stayed steady. The next day, technically, it had to break it. So there's your break, and it just continued going up, 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 up. And I would have booked profit, and I predicted it, but I didn't get into this trade. This would have been day 5, but I didn't do this because I missed it. I would have pulled out the psychological level at 69. It slightly broke it, but it didn't have enough steam to go further, and it just dropped down below. But it would have been perfect. That would have been a further from where I pulled out from $68 to 69, further 100 pips. Could have got an extra $1,000 on a single contract. So that's potential there for any people that want to swing trade. You pick your level, which would have been there. You would have identified there's no reason for it to break down below. You would have had your stop loss in place, and your fundamentals would have led you to believe it would have continued going further than where I pulled out. So yes, good week of trading. This was my last trade, day 4, that was Thursday. Friday I didn't do anything. I didn't believe that, well, I did when I got to my desk. This is the start of the day. It passed $68. It passed, by the time I got to my desk, I'd even missed the retracement down to R1, the R1 pivot level. And once it passed that, I didn't believe R1 was a strong level. As well as that, I'd missed it there. I came in around here, so there was no retracement back to R1 or even this kind of level. So I thought I just missed the trade, so I had to just watch it play out. It went exactly to where I thought, but that's fine. Sometimes if the entry's not there, or if it is there and you've missed it, you just have to sit it out and watch. Don't let your psychology get the best of you. Just learn to sit it out and wait, because in the week there'll be plenty more opportunities. So those were my trades for week 1. I traded 4 days out of the 5. As I explained, I missed the entry on day 5, so I thought there was no need to trade. I'll just let it go. I've had a successful week. Starting my balance at $4,000, $4,042. I finished on 5,507, so that leaves me on a week profit of 1,465. So that's fantastic for a beginner. Really, really good. So if I was to keep that the same amount of pips but with more experience and more size, adding an extra contract will double that. Adding a third contract, quadruple that. Sorry, treble that. And I'll be showing slowly how I build size, and that will come probably week 4, week 5 of my vlogs. But if you enjoyed this video, please subscribe to the channel. There will be one every week showing all my trades. There will be some losses in there, definitely. So, I mean, when I do incur those losses, they'll be very interesting to watch because it's the psychological factor, as you all know. I mean, how you handle your psychology is vital. Limiting your losses is extremely important. Risk to reward is very important. So I'll be showing how I deal with these as I go ahead. So please subscribe to our YouTube channel and also follow us on Instagram as well. We are Triumph Trading, and you can also follow my journey on there. So thank you for watching my video. See you soon.